Good afternoon and welcome to GrainTV. It's May 28, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We had a mixed trade in Chicago today. Let's turn with a fire tip to see how we ended. Corn was up 9 1/4 cents. Soybeans, the leader to the upside, up 33 cents. Wheat in Chicago down 3 3/4, and Kansas City was off 2 1/4 cents as well. Logan, we did have a little bit of a mixed trade here today. It looks like wheat was getting weighed on a little bit, but soybeans was really the leader to the upside. I think a lot of what was pulling soybeans and corn along, for that matter, was the deferred months, and we really saw those, the December contract for corn and the November contract for soybeans really rally here today.
Yeah, certainly a lot of expectations for those deferred contracts were on today's planting pace reported by the USDA. Let's jump into those numbers here real quick. Planting pace for corn reported at 86%. That was right in line with what the trade is expecting. And as you can see here from the model that we've been following throughout the planting season, we've really closed the gap here between this year's planting pace and what we'd expect based on the 10-year average. In large part, that was due to last week's number, but certainly not a huge number today for the corn market, right in line with trade expectations. If we take a look at soybeans, 44% of this crop reported planted. That was slightly higher than what the trade was expecting. Trade expectations were looking for about 42% planted. So that could weigh on the soybean market a little bit here. The new crop soybean market here moving forward. Certainly a little bit of a better number, but still a ways to go there for this new crop soybean contract. You know, Brock, as you said, it is kind of a tale of two markets right now. Obviously, very different things driving the old and the new crop. Today, driving old crop prices, we did have some export inspections. Was there anything there that really caught your eye, I guess, out of the numbers?
You know, there wasn't a big surprise out of the export inspection numbers. All three, corn, soybeans, and wheat, all came within analyst expectations. But let's take a look at where we stand for this marketing year. This model that we've been following all marketing year long here. This green line is the seasonal pace to meet the current USDA projections. The red bars are what we are actually seeing for exports. This model is showing the corn export inspections. You can see here that we just barely fell short of that seasonal pace this week, and on the year, corn is currently about 250,000 bushels ahead of pace to meet the current USDA projections. Keep in mind they have revised that down substantially in the last few WASDE reports. Take a look at wheat. It's a little bit of a different story. We've had very strong wheat exports over the last part of the marketing year here, as you can see by our model, and once again we did beat the seasonal pace, and for the year we're sitting at about 27 million bushels ahead of pace to meet the USDA projections. Same story for soybeans. We're about 72.5 million bushels ahead of pace to meet the USDA projections, but we did fall another 10 million bushels on that pace, and that continues to be a story as we move out through the end of the marketing year here.
Yeah, certainly. Well, as you said, you know, not expectations for a huge game changer in terms of planting progress, but certainly if you want to watch the night trade for yourself, you can visit us over at grainhedge.com and take a free demo of the trading platform that we use here on GrainTV. That kind of wraps up the action that we saw today. Certainly a lot of fundamentals in this grain market to follow. Thanks a lot for joining us here on GrainTV. Have a great night. We'll see you tomorrow.